As we were chatting earlier, none of this is ever linear, right? So I could easily see another couple of weeks or maybe a couple of months of stability. But as we start to see the tightening of financial conditions start to take hold that we've seen, the tightening in lending standards, portfolio companies starting to feel more stress, these sorts of things take time to play out. And so there's definitely a lot more risks lurking out there. The question is, when do they manifest? And that may take a little bit longer than people think.
Eric, is there a risk that the Fed is too fixated now on this wage price spiral, that they're looking at the wage numbers and, effectively we saw on the payrolls more than 300,000 jobs still created, but it's a backward indicator. We've had news overnight from Amazon laying off another 9,000 workers. We've had a bank in the middle of Silicon Valley collapse. Effectively, this is a way to fund a lot of those big tech ventures. This is stretched across to the banking system more broadly. Surely there are going to be concerns around the tightness of credit and what this means for hiring from here. So my question is whether we've got a Fed that is just too backward looking now.
Well, I'm glad you brought up wages, because if you actually look at the average hourly earnings numbers from the last jobs report, and really from the last 6 or 7 jobs reports, they've actually been trending lower. And so if the Fed wants to cite something to sort of justify a pause, they can absolutely look at the wage numbers. And so we talk about this core services X housing number the Fed's focused on. That's another way of talking about wages. And so I think the Fed has an out here to pause because of that. And you make the point about forward-looking. That, I think, is really what this financial episode is hopefully turning the Fed toward, which is looking more forward. Because the reality is these things act with a lag, and I think the Fed will be much more cautious going forward about trying to push just on the basis of spot inflation like they have in the past.
So just spell out the pathway for us from here. What does the Fed do for the rest of the year? What does it do into next year? How is that versus market expectations that have been moving all over the shop based on recent events around the banks?
Well, certainly some of the rate move and the move in rate expectations have been driven by VAR shocks, stop outs, the kind of things where you're seeing funds effectively being wiped out. I think what's really important to focus on is what gets priced versus what happens. So I think in the short term we see more rate cuts get priced out, even as the Fed does pause. But what actually happens, the Fed probably will cut this year. Maybe it's a Q3, Q4 story, but eventually those rate cut expectations probably will be vindicated given the tightening in conditions we have seen.
How useful are things like the oil price at the moment for trying to understand the market's attitude towards growth going forward? Give us your sense on what you think commodities are telling us at this point.
Well, the signal right now from oil prices, I think, is pretty, I don't want to say useless, but it's not very good. In the sense that we've seen probably a lot of the funds that were wiped out, like I mentioned, were probably positioning for higher oil prices. We've seen that move backward. What strikes me here is that oil price for a long time, last 20 or 30 years, has been a demand-driven variable and a financial variable. And I think as we've seen more supply constraints come into the picture, that will start to change. Typically, you see oil prices, commodity prices, actually rise very sharply into a recession, even during the first few months of a recession. Look back at 2008. So we are expecting oil prices to actually recover here, even if we do slip into a recession. That could be a bit of a paradigm shift.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.